Hello, 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 everyone. Happy end of month and end of quarter. September is done, ending on an ugly note. So, how is everyone doing? Good afternoon, Davey. Hello, hello, what a day. Where were the squaring up you were talking about? We got some squaring up in the morning, and then we got the sells. Then it all fell out of bed. Ending on a down note. Yeah. Hey, Gary. Good afternoon, Sterling. So, we'll just wrap this up. We'll do some more analysis on Sunday, too. Good afternoon, Patrick. But for the people celebrating September, it is over in the markets tomorrow, October 1st. Yes, September did not disappoint. Historically, the worst month of the year. And this one did not disappoint. I still remember a couple of weeks ago when people were talking in here about, well, what about September being bad? Well, there you go. You got to wait for the month to be finished. Hey, Josh. No idea which Ponzi you're talking about. There's been many Ponzi's out there. All right, let's get right down to it. Again, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, leave some comments and like the videos. Let's see. Chicago PMI numbers were ugly. Ugly, ugly, ugly. I was watching it to see if it stayed in, where it was going to be. Remember, below 50 is contraction. That is big contraction on the Chicago PMI. Consumer sentiment actually coming in a little worse than expected, a little worse than forecast, a little drop there. I know people were celebrating this, and final inflation expectations coming at 4.7 versus 4.8, and 5-year coming in a little better. But that didn't last for long. We have lots of Fed speaks today reiterating that. Again, I think there was, who was this afternoon? Bowman? Or earlier today was Bowman, and saying, they'd rather risk overdoing it than underdoing it, if I remember that correctly. And that's really about it. Stock market, your mega caps taking it in the shorts going into quarter end. Not a lot of real area to hide. Real estate surprisingly was up pretty decently today, but that's not something I go in long term. There was some squaring though, because there's been some pretty decent shorts in REITs and real estates. This dropping surprising even with Fed speak today, but back to about 55 for the 75 basis point, 45. We're gonna have to see how this modifies. Remember, the rate hike decision is over, still a month away. Well, roughly a month away now. November 2nd, tomorrow's October 1st. Still in negative gamma territory. There was some decent weekly option expiration today. So I'm going to reassess to see what this looks like over the weekend. Fear and greed still in the toilet. Interesting. What's more interesting is we closed below the June lows finally. Well, the futures aren't technically closed yet. They have 20 minutes, but unless they can stage a rip your face off rally in the last 20 minutes on a Friday afternoon, they're closing at new lows from June. Nasdaq looks like 11,068.50 right now, trading 11,055. That's closer. The Dow, there's no way that's closing above June lows. But the Dow, remember, only 30 stocks. The Russell still is the only one that's not going to close below June lows guaranteed. The cash closing below June lows. Nasdaq cash closing below June lows. So the only real question left to see is where the Nasdaq futures close in the next 20 minutes. But this, especially where we've worked nearly up to cycle tops again on the S&P. Yeah, cycle bottom still on the weekly. This is actually not good going into next week. Not good. The stock market's not dead. Why would the stock market be dead, Santer? Or is that Santer? Stocks just go up. Yes, they obviously, especially today, they just went up. Gary, trading the SQQQ, and he bought the dollar versus the yen. Hey, options 22. Real rally time hyper oversold. If we go lower, I'll be stunned. That means we're going lower. George, put the you put the kibosh on any rally. We're going lower. Actually, I'm going to be doing research. I'm going to some point get some a little break tonight, but I'm going to be doing some looking at the potential for the capitulation next week again, because based off this close and the way it looked and the market internals, we could be setting up again next week for a potential capitulation move, and I don't throw that term out lightly. So we're still at that teetering, and these closes did not help anything. If you look at the weekly, the 200 on the weekly, let's take off some of these indicators. The 200 on the weekly, ugly right there. I mean, it's a ballpark area. So right there, the S&P's finally tested the weekly. As we saw before, the Nasdaq is closing below the weekly. It is an area, but this is the weekly close, the first weekly close since 2010. So when 2010 got the snapback after weekly close, so we're going to pay attention next week. And if we did get a capitulation move, we could get the snapback. But other than that, see, the last couple were snapback moves. If we don't get the snapback move, I'm prepared for watching out below. I'm prepared for watching out below if we don't get the snapback. The Dow last week closed at the 200 weekly, now well below it. Well below it. So the Dow is just and the Russell's been below this for a while. But really, it's interesting. So we've reconnected with the weekly on the S&P. I think next week is going to be a very key week in the markets to set the tone. To set the tone for the next few weeks of trading. You can see here, new monthly low close. We're just going to do a pretty big wrap up. New monthly close back to the 50 on the month. The last time we saw that was back in March of 20. The last close below it, we're closing right at it. And prior to that, the last close below the 50 was back in September of 11. To right now, based off the futures, this month is down close to 9%. The Nasdaq closing below the 50. The last Nasdaq close below the 50 was all the way back in 08. You can see here, no close below the 50 since 08. And the Nasdaq closing below the candle body, or nearly right at it, but it might be technically closing below the candle body support, but right at it. Wouldn't that be something? Wouldn't that be? That's just sort of funny. I wonder where those targets would line up. I wonder. Hold on. I'm just a little curiosity thing here. Oops. Just a little curiosity from my book. Just a little curiosity on a flat neckline, which we're not technically closed below on the Nasdaq. It's a slightly upwards, I guess. It's slightly upward sloping. Hold on. Got to do this right. And it's ugly. It's not. It's a very huge head, little shoulder, little shoulder. I'm just curious. Closing below that neckline potentially. Let's just for grins to wrap up the end of month. See where that would put us if we hit full-blown disaster mode. Oh, that's even more bearish than Waka Waka ever is. Oh, Waka. Is Waka here? Oh, this is where we need Waka Waka. Oh, first target though, 82. I'm just curious. I mean, I doubt that will play out. I am just actually just fascinatingly curious because the first target takes us between the 50 and the 62 and a half of the larger up move. So if we're going like whereas I saw a comment run by Boba, Hoba. The Ponzi's over. I'll short this scam market to death. Well, if you're going to short it to death, you could have some downside. Oh, boy. That is actually interesting. I had not glanced at the Nasdaq chart in a couple months, and that is fascinating. Wow. Did you see, did anybody see the Atlanta Fed Now numbers today? Did anybody look at that? I remember just saying that GDP will rise upward before the elections. Did anybody? We're going to see if this the Atlanta Fed Now model was at this point. That was if you follow Path Trading, and I responded to that with my personal account. But that was absurd, absurd. Let me see if I can find that tweet. Does it? Oh, here's what Path Trading did. The Atlanta Fed GDP now print of 2.43 up from 0.27%. Oh boy. Oh, you gotta love it. You gotta love it. Fantastic. I'd have to look closely at their models. I didn't look at close enough today. But I think the print's gonna come in for, what do you say, third quarter GDP not going to be below zero? So, as I said, hey, look, the 2 quarters of below zero growth GDP, that was transitory. The Fed got their transitory. It just happened to be on their GDP prints. A lot of people are hoping for true capitulation. Just flush the rest of the way, I guess. And I'm talking about capitulation. That won't be the final capitulation. I don't think. The capitulation I'm talking about would give us a potential rally bounce for a few weeks, not eventual lows. You remember, you can have multiple capitulation moves in a down market. Especially this, we're nowhere near. Let me just look back at the S&P. I was just seeing if there's anything. There's no shoulder there. I was just curious. All right. Let me get through some more comments. Just wondering to make it count as I'm just wondering to make it count as a day. Does it have to close when the bell rang or after? What are you talking about? Well, the cash closes at 3 Central, 4 Eastern. And the futures don't close until after that. So the official cash close, that's why you have a cash close and a futures close. All right? So if you're just going off the cash numbers, they close at 4 Eastern. With the stocks. If you go, and I'm just talking the stock market. And remember, if you're trading a lot of the futures, again, they're trading 23 hours a day. So they have a different close. And then oil has oil has a pit close. And then the Globex trades. S&P should retest the 50. S&P should retest the 50 on which time frame? S&P retested the 50 on the weekly. The last weekly close of the S&P, it did manage to eke out a close at the COVID lows before the reversal, and now closing right at it today. But let's just take the COVID one off the table. But the last major close for that was back in 11. And then it got the bounce back move also. Told you double bottoms don't, because that's actually a complete crap statement, Kalani. Because one didn't work, that doesn't mean double bottoms don't work. There's a probability associated with it, and it's not 100%. It's really close to 70%. So 3, 7, and 10 will work. And I told you yesterday it's dropped slightly in bear markets for double bottoms, but the probabilities on double tops goes up. And vice versa in bull markets. But you can't, we've had tons of doubles that have worked. I went through two, like the euro had a double that worked. You can't say double bottoms and what? A double bottom, yes, on the financials, the probabilities drop a little in a bear market and they go for double bottoms, but they go up in a bull market. Now, on talking currencies, they don't shift that much between double tops and double bottoms because they trade both ways. And you had a double bottom, went to full target, and then actually you had a mini double top hit the targets. You don't know which ones are going to work. And I'll told you why that's an ignorant comment. And I'm not going to stand for ignorant comments because if you're making short-term conclusions based off one thing, you'll never be successful in this market. I'm starting to call people out more and more because if you on anything, if you go, oh, I have a system, oh, the last one didn't work, or even the last two didn't work, that's you're not following probabilities then. If you've tested something out, you can't make sweeping conclusions from short-term results on anything. Remember, I told you the story back when Bob was doing stuff, I think this was in 2010. That lady's like, he was putting out signals then, and he was putting out reliable double signals. I've amplified them since then by about 10 percentage points, at least. I think it's over 10 percentage points higher with my revisions to it. But they were decent signals. But the lady's like, I bet a third of my account on the first 3 doubles, and they were all losers. I blew up my account, and then the next 10 were all winners. So if you made that sweeping conclusion that the first 3 just happened to be losers in a row, did that change the odds? No. Actually, the next 10 rebounded it over and brought it over to winning percentage. So that's ignorant. That's ignorant thinking. You got to test stuff out. And we've had doubles that worked in a bear market. There's been plenty of the doubles that have worked in bear markets. You just don't know which one's going to work and which one's not. That's why you have stops. If you knew ahead of time which, for any trading system, which was going to work and which was not, you would never take the ones that didn't work. Oh, makes me want to rip out my hair. The market's not going to zero. Are you like the anti-TomTom now? Do we get like the anti-TomTom in here? Because the market's not going to zero, which is a completely ignorant statement too. Maybe we have TomTom and Boba Hoba. We've now offset them. Because anybody who says the market's going to zero, that is a completely ignorant statement. The market has much more correction to do, especially from a fundamental perspective. And we're starting to finally see some downward revisions in earnings. However, to say the market is going to zero, unless if we have World War III, the markets could get hit a lot more than we think. And theoretically, if we're all wiped out by nuclear annihilation, it could go to zero. Even in a major bear market, major depressionary cycle, will this market go to zero? No. The market didn't go to zero on the last Great Depression because not every company is going to disappear. It doesn't work that way. And I'm not a perma bull. But I'm also not an idiot bear. Meaning, you have to be realistic. And you look at valuations. Could we, in a major bear market, hit a PDE, long-term PDE ratios below 10? Yes, we could. In a long-term bear market, theoretically, could we get the Nasdaq return to 5,300 and the 200 month? Theoretically, in a horrible worldwide depression, yes. Is that zero? No. It's not going to zero. You're not having every company in the bankrupt. If every company in the world went bankrupt, you're not going to be watching a live stream. You don't have to worry about the markets. You don't have to worry about much then, because there'd be some, we'd be hit by a meteor. Every major crash has bottomed below the low of the last crash. Did 87 bottom below the low of the last crash? I'd have to double check of the prior crash. I'd have to double check that strategy, Freeman. Which is also why long-term, that's the time I tend to look at valuations, because the valuation model is going to give us more information. Besides the technicals, the valuation model will give us a lot of information also. Again, currently my valuation models sit, give or take, a bit around 3,000. Could it go lower than that? Yeah. We can overshoot that. That was more for fun. I really don't think we're going to hit those targets, but you know what? Stranger things have happened. I wouldn't be constructing a strategy around, I wouldn't be going buying 5,300 puts right now in the Nasdaq. This is getting interesting. This crash will be like the fall of Rome. I think we have more to wipe out, definitely. And we don't necessarily have to crash to do that. So far, there hasn't been a crash since the market top in January. We have not had any day even close to a crash. Christoph's gut is telling me we sell off below the weekly 200, which we could. I think next week's going to be fascinating now. I think we've come to the make or break point, at least short term, in the markets. So I will have to look up capitulation numbers for next week. If we have left today, can you provide your thoughts on I already gave the thoughts overall. Please, you know what? You're still better to trade the friggin' futures. Let me look at those on Sundays. Options 22. And I hate those. I already talked about that this morning. The TQQQ and the SQQQ. I don't like these Ultra Pro stuff because the degradation of them is horrible. The way they're structured. Because in order to get the extra leverage, they have to. So, this, all right, if you want anything, you see, this is why the structure of them don't make sense. Because you're naturally even we've been in bear markets, but see this again, the SQQQ still we've futures below. Let's see, where are we closing? We have 1 minute left. Looks like we're not going to make that 64 target or 68 target. Looks like it's going to close below that 68 target. Yeah, unless there's some, yeah, it's done. That's it. So Nasdaq officially closed 11,000. I'll have to see the official closing print because they take into all the market on close orders. But it's not going to be above 11,068 unless something really strange happens. So today, your close is the 50, roughly in that 58 area, 68. So the Nasdaq closed below the June lows also. Now, so Nasdaq, you have below the June lows on the trading and the closing basis, and look at the SQQQ. The Ultra Pro short. Did it even close? It trades inverse, but did that even close above the June highs? No, not even close. Not even taking out the June highs. That's why it's garbage. Trade the friggin' futures. Other than this crap, you're gonna get more reliable price action. How is it at see? How is the SQQ at 800 during the pandemic? The natural way it has to be done for these things, and that's where, this thing's eventually going to long-term degrade to zero. Long-term. Because of the way it's structured. With these ultra shorts. It burns through with its structure. It burns it naturally. You're trading against the current in this, even in bear markets. Which is, you can see that. It has, just on a price action, this is the ultra short QQQ. It should have easily taken out June highs because the market took out June lows on a cash and a futures basis. Did this? No. You're trading against the current. So I don't touch things like that. I can't stand trading, and some people like to trade it. I just can't stand it. See, one thing, Kalani, as I said, that you still have probabilities and you don't have doubles. So you have one double that didn't work, but you don't know which probabilities. You might say, okay, we have a double top. We're in a bear market. You could have 5 double tops even in a bear market that don't work. You could have 10 theoretically. So I only take this. I only take that. You don't know. You got to go with the long-term probabilities. As people know, I used to gamble professionally, and I saw so many people would come on. They'd wait for like 8 or 10 things, and it's a rarity, but they'd wait for a roulette wheel, 8 or 10, and they'd start pushing out, 8 or 10 black, whatever. Let's say you had 8 blacks in a row. Then they'd start pushing out, the next one's got to be red. No, black. Oh, the next it can't go 10 for 10. Black. They get their, and then they double their bet. Hoping that, all right, this next one has to be. You don't know. You don't know. If you did know, you'd only take winning trades. That's my point, and I don't care what you can't. If you're going to systematically trade, it gets really tough to pick and choose trades, and I've seen more often than not people they try to pick and choose trades, and they do worse than the probabilities in the medium to long term. They actually don't guess the probabilities right. They're like, well, my system was 70%, and actually based off the last 100 trades, I came in at 65%. Okay, so you performed worse by trying to figure out which one was going to work and not. And I've seen that repeatedly. What do I think about next week with the Nasdaq? I think next week is going to be defining. I'm going to have to do some more research. Remember, the trading day just finished on a Friday. I'm going to need to look at some more stuff this weekend going into Sunday. So I think next week is going to be based off this, following the price action this week and where we've closed and everything else, next week's going to be the make or break week. We're not going to have low volatility next week. All right, it's going to be a decisive week. It should be next week. Stranger things do happen, like oil going below zero for a few moments. Never thought that would happen. That's why also you always trade with stops, because you never know what's going to happen. I think longer term, yeah, I completely agree. I think we'll make it even below 3,200. Don't mix up also rallies for bottoms. Remember how many people were talking back during this from the Junes that the lows were in? Were the lows in? You're going to hear it on the next rally. The lows are in, the lows are in, your lows are in. Fundamentally, we don't support that yet. Technically, I'll wait till my longer term things shift. You know what? I don't need to call a bottom. Don't need to call a bottom at all. Why? Because calling a bottom is a fool's game. Calling a bottom is simply a fool's game. Too many people like to call bottoms. Did it need to be bought here with COVID? No. Where did it shift? It shifted here. Fine. For probabilities to shift, I don't need to buy this. There were shorter term trades down here. If you followed the stock think tank, I got long, crazy long down here because some short term stuff shifted. The long term probabilities did not shift until mid-May. I don't care about this. There are still ways to make money. Long-term probability shift, and you got to ride it up. All right? See, this is I'm going to keep harping on this because there's too many people. So let's just take this. You're in here. Let's just say close-to-close basis. Right there, 42%. Not calling the top and bottom. All right? 42%. You didn't need to call the top or bottom. Because there were, you know what, if you say, you know, you're a complete bullshit if you said you bought here and sold here. Complete bullshit. Take the chunk out of the middle and the probabilities change. Didn't need to call this low, even though there's a double bottom. I'll give you another example. Back in 2016, shifted to bearish, okay? Double bottom. Was there a trade before long-term stuff shifted? Yeah. Here was the shift. Here was the buy. Even on this, was the buy here? No, the buy was here. The probability shifted, and then the probability shifted again. So you had a double bottom that shifted and triggered on the week mid-February. Uh, was that? End of February, third week of February, which played out. And during that, you then had the long term, which this did not tip it. It did not tip it into a sell, nor did this. So then the long term, you captured the bottom, but did you buy this low tick? No, you didn't buy this low tick. Were there even signs? I still remember this. Were there signs to get long on an even shorter term basis? Yes. But those targets were hit, and then a weekly hit, and went to full target, and you had your long term system hit also. But did you have to buy here? No. This is what I'm trying to say. And which probabilities do you take? On any system, which ones? This is where I don't even know what to say sometimes. So that's where we sit. All right, let's see if there's anything else. I was just glancing at a couple other things. And people can make their decisions. I just don't like these. Some people will continue to trade them. I personally don't like them. I think there's other better vehicles and other better stocks and other better ways to trade them. I don't like the triple. Now, if you're talking a day trade only, fine. But for a long term, because of degradation to a lot of these ultra, whether they be ultra bulls or ultra bears, you have natural degradation built into them. That's why I don't like holding them over a period of time. For a day trade, let's say you're trying a pattern day trader in a stock account and you want to take advantage of stuff just intraday, fine, go for it. But you start holding longer term, you got degradation you're fighting. See, and then Paul, you day trade or most short term. I agree, and that would be very short term swing trade. I don't want to be fighting degradation. I don't need more things to be eating away at my position. Did I see a chance to short bear market rallies in the next 1 to 2 weeks? Do I see a chance to short a bear market rally in the next 1 to 2 weeks? Well, once we get the next rally, we will watch for key reversal patterns at key places. It depends on the rally. I've already gone through what I like to do, especially in bear market rallies. We get an entry signal. I like to take part off at key targets and then trail. Why? Because a bear market rally can go on a lot longer than you think. All right? That's why I like to trail. But if we get a major top pattern, then yes, you take stuff off. But I'll give you an example on anything, because under your logic, Kalani, you wouldn't be taking any bullish trades on any time frame in a bear market, which is fine. Don't. I don't care. But if you're tactical trading, you can't filter out which ones are going to work or not. For example, in the last substantial rally, we had a weekly bear entry here. Stayed in. gotten out on the rollover, but you're trailing out at least part of your position. By the way, if you do get a close above this week's high next week, if we get a snapback and you wipe out this week's high and you close next Friday above this week's high in the Nasdaq, is another bounce signal. Also in the S&P. And by the way, this also potential double in the S&P on the daily is still valid. Nice little bounce off the harmonic today, but it is also valid. And I believe this is the weekly high too, 37.51.25. You just double check. 37.51.25. Now that does not increase the probabilities because there's two separate systems. However, next week you get a daily close before. If we make new lows or some big flush out move, this double would be off the table. Let's just say these lows hold, and we don't. This is again hypothetical. If we got the daily close above 37.51.25, would that trigger a reversal pattern? Yes. Then if you got the weekly still close above that, it would also trigger a reversal pattern. Is that double the probabilities? No. They're independent systems. Do you double up on your leverage? Well, depends if you're trading them in the same or different accounts. You can take the two different trades in two separate accounts because they're also on different time frames. But you have to take that in consideration with your overall portfolio risk. So, could we get bullish bounces? The last one did pretty well. The one before did not. This one did pretty well. The one before had a little follow through, but then rolled over. Do you know which one's going to work? I sure as hell don't. If you have a better way to figure it out than testing repeatedly without curve fitting, then go for it. And at some point, we'll have rip your face off rally again. And we'll get to the side where everybody says, hey, look, the lows are in. Look, the lows were in. Oh, no, they're not. Mike, does a breakout combined with a first cross in the rotation zone make for a good entry? Should I wait to retest after a breakout? The first cross is not something I trade. The first cross is something that keeps me on the right side of things longer term. I do not trade crosses. Now, a first cross after a breakout is just a reinforcement, but you're already in but through another signal. I do not trade crosses. They are too laggy. But they generally keep you on the right side because they're laggy. We do have non-farm payrolls. We'll take a look at next week's stuff on Sunday. What did you want to look at, Christoph, specifically? I am not pricing in a deep recession at this point. Could something change? Yes. Let me know, Christoph, exactly what you want to look at with similarities. I mean, we could spend all 3 or 4 hours looking at similarities and differences. Can we look at snow? We can look at snow. What did you want to look at, Sterling? Double triggered, double top. So far, it's just bounce back move. Nothing's really changed. You do have a little mini double bottom. Even if you're taking the right side for stops, I'm just checking something out. That, see, that doesn't even come close to the stop right there. And if you're really, I'd be using the left side on here, and we don't have. Oh, hold on. And we don't have stop reduction yet. So here's technically your initial stop is still above 190. So yes, you have a confirmed barely triggered double bottom. It could still come up here. I don't know if this stopped it out technically. Hold on. No stop. So could this reverse next week and play up with, you can have doubles within doubles. This could easily play up here. Look where it takes you, right to the 50%. Then roll over again and take out all these. These are two different duration trades because this one's really a weekly trade. Even though it never triggered on the weekly, it's a bigger time frame. Did that trigger, or is that just on? Because that was I on the 4-hour? Because I was watching for a daily trigger, and that did not trigger on the daily. It did on the 4-hour. So it's not even a daily trade. Remember, higher time frame confirmations test better than lower time frame confirmations. So why doubles on a 4-hour daily, weekly test better than doubles on a 5-minute or 15-minute. Meta. There. I mean, long term, I'm starting to watch for we might have to get through the next earnings, but longer term, I'm starting to watch for a more significant bottom in Meta, although we could see some much more downward price action. It's starting to get interesting, though, from a fundamental, but I don't have a reversal play just yet. It's a long-term reversal play. I think we're still going to get more compression after this next earnings, though. But I got to trade the technicals. We just hit that fundamental, taking it to the next key harmonic area, roughly. That's pretty interesting. All right. No bottoming pattern yet. This is a horribly sloppy mess, potential double. It's still valid if you are looking for, if we do start rallying next week and you want to play a potential meta to the upside. 4-hour close above 142. Lower probability since it is against the daily rotation zone, but that's the only bullish play. Otherwise, would not be, I mean, there's no front run pattern on that. Can I show how you measure the double? You want the second, you want for a higher, right side, you want it to at least be below the 75 retracement. for a lower right side, I've not released those rules publicly. But there's plenty of ones with the higher right side. So you just do your retracements from the base to the peak, and as long as you have a low that goes down below the 75 level, you're fine. It can go lower than that. The ES on a weekly time frame, comparing it to, so on your weekly time frame of the ES, comparing it to 2000, I mean 2008, sorry. Did you want to look with relation to the, let me pull this off before I confuse myself. So if you're just looking at the key stuff here, I mean, just from the, if you're looking at key moving averages, it tested the 200 area a couple times. Here was your close below it. Then you got it took 2 weeks in here, but you got your snapback rally. And then you finally, on the next one below it, this first one didn't close below it, but the next one major close below it just tanked it. The weekly, you got shifting on the rotation zone concept. You shift in the bear market, never got back to bull, got them pretty close to neutral, and then tanked it there. If we look at I mean, if you look at the initial sell-off from the .com lows, again, things can rhyme. They don't have to repeat. Your first major downdraft where you found you had a little bear market rally there, then you got the little downdraft here. You know, I just around that 37.5 on the closing basis. And your more substantial bear market rally. So now if we take all this info going forward, I mean, so far from the COVID lows, we've never had a weekly reversal yet. It went to neutral, but no bull. This is the first test right now of the 200. We've tested below the 37.5 twice, but we've never hit the 50. That's why I'm watching next week to be the make or break week, or at least give us a lot more clarity. So could we still, even with a spike down, then a reversal, have another substantial bear market rally, and then a rollover play? Yeah. And based off this again, sorry, too far back. What's the key level that I'm watching for? Because as we did exceed the lows, but we got the warning sign on the move below the 62.5. Then we held at the 87.5 for a bit, retested, and then eventually went to new lows. Now, just because, again, things can rhyme, they don't have to repeat. What's the key level? And I haven't even highlighted on green. It's been on the chart for a while. See, if I take off these blue lines, what's here? So, the 3160 area. That's why I'm watching that for a key close. Why am I watching that for a key close? Because then we could easily see the retest from a probability standpoint of, look at the next two lines I have in here. Oh, let me pull off this one. That's a longer term one. But here's your next two lines. 75, but 87.5. And then theoretically, could you take out the COVID lows? Yes, you could theoretically take out the COVID lows. But we're still a long way off from making that call. First, we'd have to get a close below 3160 area. So this is why we're sitting at a critical juncture. And we've already talked about, this was the first area I talked about, that I'd be watching for the area of a bounce. Does that have to bounce right at the 200? No. This is the first major key support area. I think something else is going to break in the market, and I don't think it's going to be from us. I think something internationally is going to snap. That's then going to really mess things up. Swung some Tesla puts. My tech analysis tells me Monday opening will be 260 or lower. SPY 354 could very well be. Spiders 354. Again, I haven't done my analysis yet for next week. The spiders, by the way, haven't hit their 200. They're not going to trade in complete sync with the futures, but let me take off some of these other levels. The next key targets on the spiders, I have 352 and the 200s at 348, so that's my next target zone. And that's a great area to use your reverse harmonics. If you want then the longer term levels, oh, why do these keep moving? Why trading view? There would be my next key major cluster would be 343 to 346. But next week I'll be focusing on 352 to 348 to the downside. You want double never triggered there. Yeah, it went full circle. Again, I don't know. I mean, vertical up, vertical down. I don't know what you want me to say about Upstart other than nothing yet with a decent long-term bottom just yet. Oh, Rich, you're so positive. Meta will go to 2 digits. That will be a thing. Oh, we missed you earlier, Waka Waka. Hey, Waka, here's your targets. Here's your monthly targets for this. Should make you happy, Waka Waka. Look at that. There's your new monthly targets, Waka Waka. Thank you, Sterling, for the super chat. No, I think there's some other YouTubers that know what they're doing. And I will answer questions without super chats. And I thank you, everybody. Acknowledge Sterling for the super chat. Is that a model I should adopt? Should I only answer questions for super chats? Tell me if that's the model I should adopt. Or should I start a fund like someone named Kevin? Should I be starting a fund? Let me know which of those two things I should do. You're welcome, Amit. You're welcome, Gary. So what do you want to see as consolidation in the rotation zone? there's many signals you can use with the, well, I'll have to put out a hold thing on the rotation zone. You don't make limited. For the time being, just use the rotation zone as, especially the longer term ones, as key areas to watch for reversals on pullbacks into them. I think, well, Waka Waka, one more final rally to the trend line before the major dump, which we've already done some now. We could very well if we hold next week. Where's Tom Tom? Hope he's okay. Well, we had the anti Tom Tom in earlier. We had the anti Tom Tom of Boba Hoba. So maybe Boba Hoba and Tom Tom cancel. We had antimatter and matter meeting, and they might have nuked each other. You're welcome, Christoph. Coco started drinking the Tom Tom Kool-Aid. The entire world's financial landscape is a minefield at this point. Only a matter of time before one of these countries detonates one of these landmines. We still need to see the overall long-term reset. And I'm not talking the Great Reset. But our financial system has to get a lot of stuff out of it. And remember, if they start, that's why I'm so against the Fed going to easy money again, because that's just going to pop it up for a little while longer. Then we're going to have the longer you postpone at least some kind of flushing out some of this excess, the more painful it's eventually going to be. People do need to read the charts. Well within target. See, Waka Waka likes a 5 to 6K will hit. There you go. And look where the monthly 200 is, Waka. I would just threw out a random name called Kevin. I don't need to meet Kevin. Should we all start funds? Should we pass our Series 65 and start funds? That's up. I don't know. Let me know. If you think that's a good thing, give me a super chat. It does take a while. There is a lot, but the tools are very simple. And the longer you use them, the more you see how it fits together. There is a method to this madness. What's my go-to drink? My go-to drinks, I am a huge bourbon and scotch drinker. Good American bourbons, and love some aged scotch. Actually, last year, and I haven't got a new bottle yet, I finished off my Macallan 25, which was really good. And now the price is through the absolute roof. But I did finish off my Macallan 25, which is not a daily drinker, by the way. I don't have that kind of money to throw into a daily drinker. But those are my two go-to. Really good scotches and really good bourbons. Who's Tom Tom? Tom Tom, Boba. I didn't know you were still here. Who's Tom Tom? Tom Tom is the perma bull. To the point of being, I'll put it nicely, ignorant. Because he comes on here every day and says, or most days, and says the market only goes up. Period. So you said 0. He says the market's new high. I think what's his call for SPY to 540 by year end? Or some ridiculous thing. And you know what? Just why you can't get overly, you have to use price action. And don't just get blinded by anything. That's why we analyze both sides, to try to keep us from getting a scotoma. Because scotomas prevent you from seeing things and then get you lopsided. And bears can have major scotomas too. It's not I mean, Boba's so far proving to be the anti-Tom Tom. Boba's for zero. I see. Well, you were close. Walk away. Whiskey, bourbon, scotches. You know. Now I will drink a decent whiskey. Path Trading Partners ETF. Oh no. You didn't want to vote for that. I don't want to go back and take my exams again. I used to have all my series exams. Let them all expire because I didn't want to maintain professional status. There's no point unless you're running money or doing huge prop trading. What was this? Paul, you brought Gamma back into my set of data points to consider in my trading strategy. It's a great risk mitigation tool. So I thank you for that. Props were due. Well, thank you. Again, that's why I highlight this, because you have to be aware of, especially in these kind of markets of heightened volatility moves. Yep, right now I'm pretty much at the point where I can pretty much stay even, but working on what works best while I'm still testing all the things, and that's part of the process to becoming a trade. First, you get to even, and then you fine tune things for yourself. Again, I'm not trying to make clones of me. I'm trying to show you what works for me, and you can take and choose what you want and develop your own things. I'm also trying to teach a mindset, because half the battle is a mindset. All right, Christoph's likes Johnny Walker Blue. Coco's a tequila guy. What's your favorite tequila, Coco? Can you check on OXY? Hey, again, if I don't get your comment right away, don't give up on me. I'm trying to get through it. OXY. What I would be paying attention to, you're still in your key thing now. Look at your key thing now to watch for if you're trying to trade this from the bullish side. Your key thing is to just pay attention to this low from middle of June, because you get a weekly close below 54.24. I'd start watching for the bigger pullbacks. Longer term, still bullish. If this triggers, I'd be using some of these key levels to look for bottoming to reestablish your positions. Especially since we still have the weekly double top in crude. Now, people are still calling for a significant bounce in crude, which we could easily have. We've hit the stop reduction. So unless you get a weekly close above 105.89 or a weekly trade through 111, this pattern's still in play. So we could even have a bounce even back to 93, 94 area, and then roll over again with a global recession coming. Keep in mind, we got OPEC coming up. We got some potential bounce plays, because this can take weeks more to unfold. Remember, from the initial trigger point, it took 1, 2, 3, 4, 5, 6, 7, 8 weeks to hit the first target. So these can take many more weeks to unfold. By the way, on crude, if you got a weekly close next week above today's weekly high, would be a buy pattern, a short-term buy pattern. Why'd I look at that with Oxy? Because we could see, now unless this really starts getting up, to these above these like 70, up around the 72 areas again, we're still looking at this potential, not confirmed yet, double top. So in the short term, that's the area I would be watching. Before I could get in the short term or overly bullish, today this would be at neutral mode. Well, technically the daily rotation zone is in bearish mode. Based off the rotation zone concept, you need to get back above about 63.50. But until I can get overly bullish again, I need to get back above 69 on a short-term basis. I think if you just want my opinion, because also remember, I'm just showing you a couple different things. There's a reason I was jumping around back to crude. Sorry. Based off these lows, based off the lows to establish the double bottom, we got the close back on in September 22nd below the 62.5. We have yet to hit the 87.5, and look where the 200 is. I would still, from a probability, we came close. I would still expect a retest of this 200. Now, you could retest the 200 without ever triggering this big double top pattern. So that those are two separate events. But I'd be watching for a longer term support back down in here to see if this holds. That's how you can put the tools together. So there's your Oxy. You are welcome, Legion. Macallan is my wife's favorite. Well, your Macallan, your wife has very good taste. Single malts. Yes, Patrick. Tequila keeps you alive. It can probably do that. All right, Tom all in on October 450. Sterling with taking the notes. I don't think he's actually doing this. America, dark years are coming. Well, there you go. That's why you're saying 0 for Boba. We're... All right, I don't need to go back. You're welcome, Waka Waka. Well, good luck with your mushroom hunting. Again, those are cooking mushrooms for anybody who wants to know. Those are not psychedelic mushrooms. Cooking mushrooms. What he doesn't realize is retail is a fraction of the market, and the bond FX market is what has the moving power. Yes, that is very much true, especially, well, both the FX market with stuff like the yen, the pound. We could still see a lot more damage in the pound. Don't discount the pound yet. Well, actually, do discount the pound. And the global bond market is huge. And that's where you're going to get some cracks showing, especially overseas bond markets. Not ours yet. You're welcome, Balaji. And back to OXY. It does have some trend line support. I'm more watching for the stuff in here. So just keep that in mind. This is sort of no man's land after the gap down, fill in the gap. I'm really interested to see us reconnect with the 200. One is hoping that he who's not to be named does not have money. If you go to a super chat answer only mode. I wouldn't do that. I'm not that kind of person. I'm not really going to go to us. You know what? If somebody wants to really know, and you know, if people want to donate, fantastic. I really appreciate the donations. If somebody wants to learn and can't afford $20, then okay. you know what? I think the information is good, and if you want to donate, then donate. I appreciate it and help support the channel. But there's no way I'm going to turn away people who really want to know something because they can't give a super chat in. I would rather have people learn something. And for the people, especially the people that can apply some of this knowledge and make money off of it, then consider some donations. That's the point. Support what works. Support what you believe in. Now, if you just want to sit here and not do it and not help the channel out, that's your prerogative too. I'm not going to kick you out. Well, it's technical, but I've said Coco's the second one. He's got it is technically reserved for. What happened with Robot Day, by the way? Can I still short the market if Putin nukes the U.S.? It depends where the nuke hits, Boba. And if Putin nukes the U.S., you can short a bunch of other markets because you're going to tank a bunch of the world's markets. So you're free to short whatever market you want. All right. By the way, we didn't peek at Tesla. Tesla actually closed. Did it? I was watching that going. Yeah, it did. It finally. Closing below the lows finally. Finally. Oh. This next earnings report is going to be interesting. And their delivery numbers. When does anybody have the date for Tesla delivery numbers? When they're expected? Well, if Putin drops a nuke in the USA, the global markets are going to tank. It doesn't matter if he nuked Wall Street or something else. The global markets will tank in the short term. If he wipes out the U.S. with nuclear weapons, well, then you'd probably be wiping out the world, and we all don't have to worry about it, do we? You don't have to worry if your puts or your calls are going to expire worthless if the world goes up in nuclear war. That's going to be the last thing you're worried about. So I don't really, if nukes start flying, I'm not worried about my next position trade. All right? Not really worried about it. Now, the tactical nuke over in Europe is a different story. That will still tank the markets, but then we'll have to see how that plays out. And I don't want any nukes to be falling anywhere. I don't know if that'll be the best trade in history because the world, literally, if you want World War III, I don't really want to have World War III to have a good trade. And if you get into a major lobbing nukes around, I don't think we're going to be worried about the next trade. Well, we start lobbing nukes, yes, with the EMPs and everything else. Lots will stop working. And let's end this on such a positive note. All right, everyone. I will be back on Sunday. I have some analysis to do. Going into Sunday, I will put out a sector overview. I am going to take a break now. Waka and Coco might both be proven right if we spiral in. Well, if we spiral into hyperinflation, yes, it is the time to buy the market because markets tend to take off into hyperinflation. Again, I don't want to see a market rallying because of hyperinflation because then we have more bigger problems. Although hyperinflation is probably preferable to global nuclear war. Why is this getting so depressing? I guess because it's the last day of September, we might as well end a month on this note. Jeez. Well, there you go, Gary. I will see everyone next week also. I need a break now. I mean, boy, you want to talk about needing a drink? You guys have cheered me up. I thought it wasn't a half bad day until I decided to do a live stream. Wow. Let's be positive. You are welcome, Sterling. Again, everybody have a wonderful weekend. If you can join me on Sunday afternoon for the live stream, fantastic. If not, considering watching the replay, and I will be back. Besides Sunday, I will be back for an interesting week of live stream trading next week. Talk to everyone then.